presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compak Asset Management Market Wrap YouTube Weekly Update for November 13th, 2020. I'm going to talk about the markets. Again, these are my opinions, my thoughts, and what I'm thinking about the markets today at the end of this week and what I'm looking at it from a technical perspective. I'm going to talk about the pandemic, where we are, where we're headed, where we could be going. I'm going to talk a little bit about Riskalyze. Riskalyze is a way to measure what is your risk number, and I'll explain that in a lot more detail. Then again, we're going to talk about technical analysis. What are the markets trying to tell us? As I call it, the language of the markets. So let's start with the pandemic, the coronavirus, where we are. Well, we sort of started to open up in the middle of August, and then we again tried it again in September, but we've sort of plateaued here and we are going sideways. Unfortunately, I will talk about the numbers. They're going up, and we might not be going to a reopening in the short term. If you look at the virus, it is spreading. This is the area where it is spreading, all in red, and some of the other isolated areas that you can see. If you look at the coast, Texas, you can look at Florida, you can look at some of the other previous hot spots. They're not as hot anymore. It is the areas, the rural areas that were sort of isolated, were not impacted by the initial wave of the virus. Unfortunately, the virus is getting there now. And we are seeing record numbers of infections. We are seeing record numbers of people going to the hospital. Thank God we have better therapy. We've got better therapies where the doctors know exactly what to do now, or at least they have some ways of controlling the virus, and the death rate is not as high as it was. If you look at the moving averages, the 7-day, the caseload last week, it is moving up to the 7-day moving average is about 100, and it was about 100,000, just 90,000 approximately, between 80 and 100. That's where we were last week. If you look at the caseload this week, we are at about, as of yesterday, we were at 134,000 infections on a 7-day weekly average basis. The daily numbers are above 150. So the virus is really accelerating. You can see the peak that we saw in July, where we had all the people in the hospitals and we had all the people, the problems in New York and some of the other. Now you can see that this has just grown exponentially. It has over doubled the number of infections that we're seeing right now. What this means is, as I'd mentioned 3 months ago, if you listen to the broadcast, I said once we open up, the younger people are going to go back to colleges. They're going to go back to doing what they're doing because they're not immune, but they're not as affected by the virus. But they will take this virus to their parents, their aunts, their uncles, their mother, their grandmothers, their grandparents, and all of those. And now we're seeing those infections spread dramatically. You can see here's the caseload. As of yesterday, that was November 12th, we saw the daily rate at 163,000. That is a record number when you talk about 163, and the 7-day average, as I mentioned, as of yesterday, was 134,000 people. That's the 7-day average, it's not the daily number. So we are seeing the exponential growth in the virus. And as you can see, that by this estimate, they're saying that there's about estimated range of 6 to 24 people these are just the people that have been tested. There's a lot of people that are asymptomatic that are out there, or they just don't know that they have the virus. If you take those people into account, we could have as many as 113 million people, or 34% of the population, already infected by this virus. We're getting closer and closer to herd immunity. That's about 60% of the people, if they have had the virus. That means at that point we start getting just about everybody has it. And unfortunately, when you look at the numbers, the older people do not have those kind of numbers yet. If you look at the people as hospital bed occupancy, this is for all inpatient beds. It's just not for, if you look at the coronavirus that is being used, it is about, some of the areas are between 20 to 25% of the ICU beds are being used for coronavirus patients. Those especially right up here. You look at these right here, the South Dakota, North Dakota that we're seeing, Minnesota. Then we're seeing some in the purple, which is about 20%. Again, the ones in tan color right here, these are just 5 to 10. But initially, these were the states that were having the highest infection rates. If you remember, New York, California, Florida. But they have slowed down because people are masking, people are doing social distancing, and that's the only thing we can do at this point right now until we get the vaccine. And I will talk about the vaccine. Pfizer and BioNTech has announced that they've successfully produced a vaccine that has 90% positivity. That means that is 90%, one of the highest numbers that you can imagine. I mean, when you look at the flu, it is only 40 to 50%. The flu vaccine that we take, the flu shot that we take every year, this is 90%. So it is a great news out there. It will initially be sent, the vaccine, to the U.S. and to the European Union. They're estimated that 450 million doses will be supplied by the end of 2021. There's there's 2 or 3 other vaccines that are just on the cusp of announcing their results. That is the AstraZeneca Oxford University vaccine that is expected to be the same, the Regeneron vaccine that is expected. It's based on the same technology as the Pfizer one is, so we're expecting 2 more to be expected pretty soon. The president announced and the doctors announced that millions of doses will be out the door by the end of the year. Initially, it'll be only by the end of this year, but initially it will be only given to the high-risk populations. That means first responders, people, the elderly, people who've got underlying conditions. So I think by March, we will see a great number of people that have been vaccinated. If you look at the effect of this, we had one of the biggest rallies in the market on Monday. Market was up 1,700 points on the open, ended up 800 points out of the Dow Jones Industrials, one of the biggest moves. I think it was a relief also that the election is over. That's basically what the market, when finally all the states were announced and some more were announced today, I think last weekend, finally we got to a point where, okay, we said the election is over. Good, bad, or indifferent. Some people, half the country is happy, half the country is unhappy. As I mentioned over the last few weeks, we'll get to a result. And now that we do not have a disputed election, as much as it might be disputed, it is that Mr. Biden, as of tonight, has the same number of electoral votes that Mr. Trump had, and some of the margins in the states that Mr. Biden has won are larger than what Mr. Trump won by. So there might be recounts, there might be some delays, but very few. I've seen these recounts before, and very few votes are changed that we are going to see. So with that, we do have a Biden presidency coming up, but at the same time, there was no blue wave. The wave went out. There was no wave at all. As a matter of fact, the Republicans won more seats in the House. They will keep the Senate. That is a divided government. As we've seen historically, the market has done the best when we have a Democratic president and a divided Congress, and that's exactly what we are expected to get. Now, there is a chance that Georgia, there's 2 more seats. There's an election that is expected to take place on the 5th of January. There are 2 senators to be elected from there. If both are democratically elected, both are Democrats that are elected, then the Senate could become Democratic. The chances of that are small. We feel that they will split the seats, and it'll be 49-51, a Republican Senate. That should keep Mr. Biden from raising taxes dramatically. He can do a few things with executive orders, but to raise taxes, you have to have Congress go along with it, and we don't see that happening. Let's talk a little bit about where you are now. If you've been worried about the market, you sold out in March, did not get back in, or before the election, you raised cash because you're too nervous with the market, you have too much risk. Your portfolio does not match your risk number. That is where the first thing that we do when you call us for some advice, we ask you, what is your risk number? And we take you into a program where we find out what is your risk number. What this does, it gives us between a 95% probability how much money you can make or lose in a 6-month period. Not a bear market, but a 6-month period. And that gives us your risk number. Your risk number is up. Obviously, you can take more risk. A lower risk number takes less risk. So we find out this is your emotional risk number. Once we know emotionally how much risk you can handle, So you're not laying up at night and worrying, oh my God, the vaccine numbers are, the coronavirus is expanding, who won the election, we've got a bear market, we have a recession, all the other things that go on in the world that you can sleep comfortably. I call it the sleep at night level, that we find your right emotional number. And that's what the risk number is. And then we have portfolios that match your risk number. A 59 or a 67 growth and income strategies where you're looking at income. If you're retired, you'll want to live off some of the income that you're getting from your portfolios. Other people who are younger can afford to take more risk. They have growth strategies. And again, depending on your risk number, we find the right one that matches your risk number. That we find a portfolio that matches your risk number. And that is where we come in and do this, not just a guess, but we do this for you. Again, if you want us to do this for you, all you have to do is click on the slide and to get started, and click on that banner below and just click there, and we can do that. Or you can just go to compak.com/Riskalyze and we can help you get this number for free. So then you can get your risk number, then we'll look at your portfolio's risk number and make sure that they match. It's like a speedometer. When you're on the freeway, you want to know how fast you're going. If you're going 90 miles an hour, but it feels like 40, when the first curve hits, it is disaster. And that's what happens to a lot of people. So give us a call. We'll be more than happy to help you with this, or just go to compak.com/Riskalyze. Let's now talk a little bit about the technical analysis and where we are as far as the technicals are concerned. I put out a Dow chart today, which over the last few weeks, if you have listened to this, I usually do not pay a lot of attention to the Dow, but this time I did. I wanted you to take a weekly look at the weekly chart. We gapped up right here on the weekly charts this week, where the market, last week's high did not overlap this week's low. So that is a gap higher open in the market. We made new all-time highs today. The market closed at the highest level ever in history. The Dow has never been this high. Now what this means is we're seeing a rotation. People are selling some of their tech stocks and going into the reopening trade. And you're saying, wait a minute, we're seeing record COVID numbers. Why are people buying the stocks, the reopening stocks, or the stocks that will do well when we finally reopen the economy? Well, you have to remember, the market is a forward-looking mechanism where it looks forward way beyond what is obvious. What is obvious now, it's history to the market. So the market is looking beyond, and we are looking at the first quarter or the second quarter of next year. The market feels like by that time, we will have a number of people that have been vaccinated, and we will be on our way to reopening. We're never going to go to a pre-COVID world, just like we never went to a pre-9/11 world. The way we traveled after that, we had to go through, take off our shoes and so on, as you know, when we flew. So we are going to have changes that we are going to make. Probably we're going to still be masking. Probably we still are going to be using better hygiene and washing our hands more and so on. But we will go back to a lot more activity. What that means is people are selling some of the tech stocks. They're buying some of the reopening stocks, the industrials, and some of the other stocks like airlines. And that's why we saw a big move. The Dow had the best week in 18 years relative to the NASDAQ. That tells you there's a rotation taking place now. Here's the S&P daily chart. I was looking at 3,600, 3,588 was the previous intraday high. We went way above that on Monday, but came back down. Did not close at a new all-time high. But today, the S&P, I'm happy to report, is at the highest level ever. It has never closed this high in history. Again, my target here is about 3,750. And if we do see an extension, we could get up to this, the 4,000 level. I don't think we get there by the end of the year. I think that's more of a year, sometime in 2021 we could get there. And again, we are looking at the weekly charts. A third wave target on the weeklies is 3,750. Going back, once we hit the fifth wave target, I think after that we'll start some time of a correction in the market, and that will equate to everything moves in 4 waves. This is wave 1, this is wave 2, this is wave 3, and on a weekly basis we could hit wave 3 and then come back, which would also be the wave 5, and then we start the fifth wave on the weeklies to the upside. As you can see, we could see a third wave extension. That doesn't mean we're going to go to this is going to be a fifth wave move. It could be a third wave, and that could give us an extension or further moves to the upside. We don't know that, but those are my views. Those are my opinions. That's the way I'm analyzing these charts right now. Looking at the NASDAQ, also same thing on the dailies. We did not close at a new all-time high, but we did make a new intraday high. Again, the target is somewhere around 12,800 as the target, and then we can see further extensions on this. Supports are at these levels right here on the downside, that if we start going down, these are the support levels. On the weekly charts on the NASDAQ, we're looking again 12,500 to about 12,800. This is again a third wave. It's looking like a fifth wave high, but we'll see how this plays out, or a third wave or a fourth wave pullback. On the gold chart, again, we did come down this week. As the coronavirus vaccine news came out, people said, okay, we're not as scared, and then we're not as scared, they don't need to do as much safe haven buying, and with that, gold market was one of the safe havens that everybody is buying. It came down. We had one of the worst weeks in gold this week since September of this year. The gold market was down $97 on Monday. Did recoup a little bit later on in the week, but it's still down for the week. I think until we get a new stimulus package, where we print more dollars, put more money into the economy, which causes the chance of inflation, that helps the gold market. But right now, we do not have that stimulus package yet. That might be talks, we might see Mr. McConnell and Nancy Pelosi talk, but we haven't seen that yet. That is my views. Those are my thoughts. That is my opinion of what happened to the market this week and what I expect to see next week. Again, if you want more information from Compak.com, just go to Compak.com and get all the information right now. Thank you so much. Again, I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indexes through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.